Greg, can I talk to you about headline risk? It seems hard to figure out exactly what headline risk means for investors right now. What are you talking to clients about when it comes to headline risk? We saw, the strike in Venezuela, and actually the market's at a record high. And then on this news, we're seeing some kind of divergent moves when it comes to oil and home builders and private equity companies. How are you managing that?
The same way we always have, Frank, which is make sure that folks separate what is episodic, what's going to move the market short term, what's going to have an immediate but short-lived impact from those long-term factors and tailwinds that we invest upon, from those long-term factors and tailwind that we think will affect the outcome for companies and for the economy over the whole of 2026, rather than this first week of 2026.
All right. More broadly, how are you looking at the market right now? Don't seem to be seeing a lot of volatility. The VIX ticked up a bit, but really very close to the lows that we've seen over the last year or so. Are there certain areas of the market that you're staying away from, leaning into, just considering we see market moves based on what the president has to say? We see some investors hoping that we see rate cuts. I'm not sure if the ADP report is going to bolster that case. I mean, just where are you looking at for opportunities?
So first, broadly speaking, I think this is setting up to be a really good year for the markets, Frank. Whether the Fed continues to keep the cutting activity into 2026, I don't really think it matters. They've done enough already that we'll still continue to feel the impact there. We'll see double-digit earnings growth. We'll see healthy GDP growth, despite what the CFSB board thinks. Unless we have unforeseen political shocks, markets set up well. To your point, I do think rotating into more cyclical, high beta names is something that worked last year. I'll actually cite some of your own data. When you looked at, for example, I saw you look at the Dow transports versus the S&P. The transports had outperformed in the back half of the year. I think we'll continue to see that rotation out of what had been high growth, mega force, mega theme, AI data center. Still strong growth there, but you'll see the same acceleration of earnings growth in the more cyclical names. So we'll continue to get more exposure there.
All right. When you're talking about cyclicals, what area in particular? Are you saying that you like materials and industrials because those seem to be more tied to the AI trade, or do you like financials with the idea that the economy is expanding and we're going to continue to see a strong consumer?
Right. To boil it down to its two simplest, most powerful vectors, one, we're looking for things where there's some relative supply-demand tightness, but two, we're looking for those things that where the operating leverage, when we get that cyclical recovery, gives us exponential tailwind to the acceleration in earnings growth. So financials are always something that is at the tip of the spear when you're talking about reaping performance from that uptick in the cyclicality. Minerals and mining. This is something where not only will we experience the tailwind, the uplift of the cyclicality, the cyclical recovery, but also there's, as we all know, a great supply-demand tightness in many of those rare earths and many of those minerals and the mining sectors that have performed well.